trying to avoid the, hiring too senior too soon. And I've seen a lot of, times where a founder might bring in someone who's like, oh my gosh, you worked at Coke, so you must be very good at marketing. That person may be amazing at marketing, but at an enterprise level of an international brand that's been around for decades versus, you're a startup, no one's ever heard of you. Your budget is really small, and most of your work is going to be around probably testing and performance channels like Google and Facebook.
Hey everyone, this is Prashant and I'll be your host for the VC10X podcast, and today we have Jonathan Metrick with us. Jonathan is a partner and chief growth officer at Sagard, an asset management firm with over 15.2 billion in assets under management across different asset classes. As a member of the value creation team, Jonathan helps their portfolio with growth marketing, including paid acquisition, SEO, attribution, and recruitment. He has also taken on Fractional Chief Growth Officer responsibilities at companies including Wealthsimple. Jonathan supports Sagard with branding, corporate communications, thought leadership, and investment due diligence. In this episode, we talk about Sagard's strategy and allocation to venture capital, why cohort analysis is important for startups, how to scale smartly, how to find and hire A players, insights into marketing for early stage startups, budget allocation for Facebook ads, best marketing channels for startups, and so much more. So without wasting any time, let's dive straight in. Before we start, I'm excited to announce that I've started a hiring agency to help companies find and hire A players. The agency is built in line with all the hiring insights Jonathan shares later in this episode. We strongly believe that the difference between breakout startups and the ones that slowly die out is the ability to hire and retain these A players. But the tough part is, A players are often not looking for a change. They are giving their 100% to their current organization and killing it. Our job at the agency is to find these people and sell them to join your company by aligning the incentives on both sides. If you're interested, you can check out our service at hiring10x.com. We are currently running an early bird offer where you'll need to pay $0 upfront to start working with us and only pay us on a successful hire. This is a limited offer and will be given out on a first come, first serve basis. Okay, now let's start with the episode. Hey, Jonathan, so good to have you on the VC10X podcast. How are you doing?
Doing well. Thanks, Prashant. Awesome to be here.
Yeah, it's a pleasure having you here on the podcast with us. To start things off, can we first have your story and a little bit about your background and how you got into Sargard?
Yeah, absolutely. So as you mentioned, my name is Jonathan Metrick. I'm an operating partner and the chief growth officer at Sagard. We are an alternative asset manager, multi-strategy. So we invest across private equity, venture capital, credit, and real estate. I grew up in Toronto. I'm now in New York, as you can see my background. I spent most of my career on the operating side as a marketer. So in the early stages, I worked brand side at companies like Procter & Gamble, Live Nation Entertainment, Tiffany & Co., really on kind of the fundamentals of brand marketing, right? So consumer insights, value proposition, creating, omni-channel marketing campaigns. And then in the last 10 years, I've really been more in the startup kind of performance growth side of the function, leading marketing teams at startups in London at Hull International Business School, as well as being the CMO of Policy Genius in New York. And so a kind of insurtech startup. And so as a CMO, I think your role is to kind of bridge both the kind of brand and growth sides of the fence. And, I've been working at Sagard now for over 3 years. I'm an operating partner here. I lead up our go-to-market function, and we support our portfolio post-investment on revenue acceleration, so marketing and sales.
That's pretty awesome. And can you throw more light on what's the stage at which Sargard is investing in these companies?
Yeah. So as it relates to our venture capital strategy, our venture capital strategy is called Portage. And Portage typically invests in fintech companies globally, kind of from seed stage to series B or C. So kind of earlier stage, but then we do follow-on rounds, beyond C.
Great, thank you. And as the operating partner at Sargard, and this is a huge 14.5 billion assets under management. That's pretty huge. And I'm interested to learn how much of that is allocated to the VC asset class, also given the recent turn of events, how things are going for VC. Is there any change in the allocation percentage? So I'd be interested to learn more on that.
Yeah, absolutely. So as I mentioned, Portage is kind of our venture capital strategy. And Portage has about 2 billion of assets under management. So that's kind of that share of allocation that goes to venture capital and fintech investing. And that's been growing over time. Portage currently is on its third fund. So we've raised 3 funds and continue to expand. So that's kind of the allocation on Sagard.
Yeah, that's awesome. And you mentioned that you are mostly in charge of helping the portfolio companies with GTM strategies. So it would be great if you could share some of your insights on how startups, especially at the early stages, should be thinking about go to market.
Yeah, absolutely. And so go to market, for folks who may not be familiar, is everything related to revenue acceleration, right? So going to market, getting customers, attracting them to the business and then having them sign up and generating revenue. And there's usually 2 sides of the go to market function. On a B2C business or business, attracting consumers, marketing tends to be a little bit more of the lead of the go to market function. And in a B2B context or a business to business context, sales tends to be kind of the lead vector of generating revenue. And so I work across our portfolio, our global portfolio. We invest across North America, Western Europe, Mexico as well. And so I'm assisting our portfolio companies, and my team is assisting our portfolio companies post investment on thinking through matters of, okay, so how do we, now that we've got a product, how do we accelerate revenue growth? How do we get in front of more customers? How do we scale? How do we smartly scale? Often in venture, you are raising capital, right? You're an early stage business. Hopefully, you've achieved product market fit, and you've secured venture funding to help scale, to get in front of more audiences, more geographies, potentially launch more products. And the go-to-market function is here to assist in those scaling efforts. And the emphasis, I think, in today's world is really around smartly scaling. Not just kind of scaling for the sake of scaling and growing whatever customer you can find. We want to make sure that we're working with our portfolio companies to find the right type of customer, a profitable customer, and a customer that we're truly solving a need for. And I think that's a lot of the work that we do across both the marketing and sales functions.
Yeah, that's great insight there. And like you mentioned, especially right now, it's about smartly scaling, which means that you have to be very mindful of profitability, getting in the right kind of customers, managing churn, and so many other things. So, can you give us more insight into what is smartly scaling in practice, right?
Yeah.
What are the best practices in that regard?
Yeah. Well, I think, if we take a look at maybe the historicals in the last couple of years, the operating context we were in. So, 2021 macro environment, low interest rates and lots of capital. And, the operating model, I think, of a lot of startups were, well, grow and grow quickly and, generate more customers, sign up customers, grow revenue. And, as long as you're growing revenue or growing signups, then, every 12 to 18 months, you're looking to, raise another financing round and continue that kind of velocity. 2022, rolls around and the interest rate environment changes, cheap capital kind of goes away. And, the cycle of raising every 12 to 18 months as a startup, as long as you were growing, shifted, right? And the shift started to focus more around, okay, well, what is the revenue picture actually looking like, right? If you have a bunch of customers, that's great, but are they generating any revenue for you? Are they actually staying? What does the engagement look like? What does the churn look like? If you're bringing in, 100 customers a week and 40% of them are leaving, that's probably not a very sustainable business. And so there was a lot more of a look toward not only growth, but then revenue, the cost that it's, involved in generating that revenue, and how close are you away from profitability, right? Are you months away from break even, or are you years away from break even? And so those kind of double clicks into the actual type of growth that you're generating, not just growth, but, is it sustainable? Is it profitable? Are you moving more toward a break-even scenario, or is it just this growth engine is simply localized to the fact that you're just spending a lot of money to bring in these customers? That market has shifted. And I think, in 2023, where we are now, there's 2 groups of startups, I think, or scale ups. The folks who are achieving break even, right, and a very solid unit economics. They have a very solid understanding of, this is our product. This is the customer that we, solve a great problem for. They're willing to pay us to solve that problem, and they're continuing to use us and maybe referring a friend or two. those are the ones that are in a very favorable position. They're probably closer to break even. And then there's ones that are not establishing product market fit, are still trying to figure out who is their target audience. How do you cost effectively get in front of those customers? Two groups of folks, I think, in this market in 2023.
Yeah, absolutely. Totally agree. And there was one article from you in TechCrunch which talked about cohort analysis to drive smarter startup growth. So, would love for you to touch up on that and tell us more about this approach of cohort analysis that
Yeah.
startups can use.
Yeah, absolutely. I mean, so cohort analysis is something that is used across many, I think VCs, but definitely within Portage and Sagard. And the reason why we like cohort analysis is it allows us to have a little bit more of a forward-looking view into the performance of the business, right? And so why that's important is, if you take a look at just averages, you get a single point in time view and you're blending historicals with the most recent data and you just get an average. But cohort view actually groups customers into, customers by cohort and maybe the time that they sign up. So for example, cohort analysis might allow you to look at, well, how do customers who sign up in July perform against customers that sign up in August? And why that might be important is if you ran a big sale or promotion in July, and you didn't in August, there's more just kind of organic signups. It's very interesting to see how those two cohorts perform against each other, right? And over time, as a business gets more developed, you expect the cohort data to get better, right? You expect churn to go down. Hopefully, engagement is going up, and the revenue attached to each subsequent cohort should be going up. So that becomes a leading indicator for investors or even just, the business itself on, well, how are we doing? How are the cohorts in the early part of the year performing versus the ones that just signed up? And so ideally, you want those numbers to be going up. And cohort analysis, which is the kind of how-to guide I published in TechCrunch, is it just a very useful way for businesses to look at their customer base, see how they're performing over time, and it allows you to gauge, either areas of opportunity. There's like a really big spike in performance in a cohort. Well, what happened? Look into that and try and replicate it. Vice versa, if you see numbers declining, churns going up, engagements dropping off in a recent cohort, look into that. And that can be an indicator of what's to come.
Yeah, certainly, totally agree. And if we talk about the major trend in startups, maybe over the past 12 months or so, how have you seen the difference in the approaches of how startups are operating, their mindset evolve over the past 12 months or so?
Yeah. I think, we spoke about this a little bit earlier in the shift of, I think, 2021, where, cash was plentiful. And I think, growth was the ultimate focus. And, now, obviously, with capital being, more restricted, fundraising rounds are not as frequent, the startups are really focusing heavily on, their unit economics, right? And thinking about how much they're spending. How much burn do you have, right? How much money do you have left in the bank till you have to either fundraise or maybe even break even, right? And the focus around achieving profitability sooner is definitely, in the mix. I think really being clear around how are we spending our money, right? And I think, again, back to the go-to-market function in a B2C business, a business to consumer, marketing is a major lever there, right? So there's been a lot more scrutiny on the marketing spend, the marketing budget, which channels are we spending on? Are these channels sustainable? Are they profitable? Are they, as we spend more, are we building more of a moat that's defensible? Or is it just, we're just spending capital and generating leads, but if we stop spending that money, we're back to where we were before. And, on the B2B side, more of that cost is related to sales and sales folks and, getting really granular on what sort of customers are we bringing in, right? Are they, small check sizes, easy to churn, or are they customers that are going to grow with us and, are renewing contracts? We're able to upsell and cross-sell them other services. Those sort of pieces are very different. And if you've got sales folks that are not generating those larger client sizes, really optimizing your budget around that. So I've definitely seen a refocusing in on profitability, cost. But, I think this is making these businesses better because they're really honing in on, well, if we only have so much money to deploy, where should we be spending that money? Is that generating a sustainable return for us? And if it is, that's great. Let's double down on it. But if it's not, let's deprioritize that. Let's stop focusing in on it because we want to get back to, sustainable growth.
Yeah, absolutely. That's great. And how has this change impacted on the venture side of things for you guys? Has the investing slowed down a little that you're saying that, okay, let's take it slow, let's see how things unfold? Or is it at the same speed? And how has the exit potential, how are you evaluating the exit potential of these startups uh, in your target exit? And what's the time horizon for that?
Yeah. So, I mean, I think there was definitely, again, everything is within context. I think if you took a look at 2021, the deal velocity, was incredibly quick, right? There was a lot of folks fundraising, and as I mentioned, folks were going to market and fundraising every 12 to 18 months. That was their new funding round. And so in that context, there was just a lot more deal flow, a lot more folks coming to market, and there was a lot of capital being deployed. And as things shifted in 2022 and into 2023, part of the challenge that existed was, okay, well, if we're going to sign a new term sheet, we're going to invest in a new company, is the valuation stable or is it still shifting because the market's changing? And so, that's one vector I think that really, slowed down things a little bit because, when you invest, you want to make sure that you kind of have a firm understanding of the valuation of the business. And if that changes in 2 or 3 months, that's a bit of a problem. The second, I think, component is, the investors and the startups, refocus their efforts and really optimize their spend, right? So before, where they were spending very heavily, many of the startups did, they cut their marketing budgets, they cut their sales budgets, they ended up doing a bit of a reduction in force or a RIF, and that cut their burn, right? So the need to kind of come in and fundraise every 12 months or 18 months was changed because these firms really took a hard pass at, well, how are we spending our money? Is it optimized for smart, profitable growth? If it's not, let's cut it back. And their need for capital slowed down, which I think was a good thing. And now the folks that are coming back to market, I think, are in much better positions, right? Many of them have made the tough decisions to, a lot of folks grew their headcount 2-3x during the pandemic, right? If you take a look at Facebook, in 2019, they were like 45,000 employees. By 2022, they were, 85,000. A lot of startups in the tech space followed a similar 2x, 3x type, headcount expansion. And, when you stop and pause a little bit is, when you 3x your company in 18 months, was every hire the right hire? Is everybody in the right role? Probably not, right? And maybe you might have greenlit some ideas or, new product lines or going after a certain customer segment that when you pause and look at it, is this really a profitable way for us to grow or should we ratchet it back a bit? So I think the macro environment shifted, but also the dynamics of how these startups were spending money also shifted. And that impacted, kind of how often people were fundraising.
Yeah, absolutely. The dynamics have completely changed. And you mentioned about the headcounts and you mentioned some of the bigger companies. But even at smaller companies and startups at the earlier stages, hiring is a critical thing because every role you hire for is an incredibly important role. And especially in the current times, if you're spending a lot of money hiring a person, it better be good, right? So, what are the mistakes that you see in regards to people making while hiring for startups in the earlier stages? And what's the right approach to make a hire? Like if you're hiring for a company, let's say in healthcare sector, a company operates in that sector, then what should they be looking for in the ideal candidate for that role?
Yeah. So yeah, it's interesting. I mean, and one of the reasons I love working in venture is, obviously we're fundraising, we're giving businesses capital to scale, right? And often that involves hiring folks to then do more things, be it a new, CTO, a new chief product officer, a new CMO, whatever that might be. And, that's often involved in the scale up phase of a startup. And even in the private equity space where, I work across our portfolio as well, we're investing and then often you're kind of then taking a look at the team and saying, okay, if we're going to grow, do we have the right team to do so? I think, it is critical. Hiring is always critical. And, some folks I think are better at it than others. Some of the biggest kind of advice I would give folks in terms of hiring, as I, extensively involved in hiring across our portfolio, first is really understanding, what is it that you need this role to do? And so I think, many founders, have come up the ranks through a certain function, but they may not have ever been a CTO or a CMO. And I think, it's important to, if you've never done that function, to get a very clear understanding of what is it that you need this function to do at this stage of your growth. Because, what marketing looks like at a IPO stage company is dramatically different than if you are someone as a Series A that is trying to establish product market fit and scale on a few channels. And that the profile of who you'll be bringing in to lead these functions or to work in these functions is going to be very different. And so I've written a few articles, on Medium, and one of them is kind of, trying to avoid the, hiring too senior too soon. And I've seen a lot of, times where a founder might bring in someone who's like, oh my gosh, you worked at Coke, so you must be very good at marketing. That person may be amazing at marketing, but at an enterprise level of an international brand that's been around for decades versus, you're a startup, no one's ever heard of you, your budget is really small, and most of your work is going to be around probably testing and performance channels like Google and Facebook. So the profile of someone who used to lead, an international marketing division versus someone who's going to be setting up your Google campaigns is very different. So I think ensuring what it is that you need the function to do, making sure that you've lined up the profile of individual that you're hiring for that need. And I think the last thing I would say is if you've never worked in that function, leveraging someone like myself, a kind of functional expert, or bringing in a consultant or a fractional, leader to help you assess the capabilities, because it's going to be very difficult for you. Me hiring a CTO, I've never been in the technology function. My ability to assess the technology chops of someone having never worked in that function is harder. So you want to make sure that you've got someone in the mix that can really calibrate on that for you.
Absolutely. That's a great approach. And I have two questions there. So one is about, there are two approaches to hiring. One is that you look for someone who has worked at a larger company than yours, not too large, but like slightly bigger than yours, so that you know that they have seen that kind of trajectory that you're looking for. And the other is that who is already currently doing the job, but at another company. So which one of those two approaches do you suggest? That's one question. And the other question is that what's the best approach to find the ideal candidate for the job? Is it like listing on job boards, or is it like actively going out and looking out for those people, and using those two, one of the two of those approaches,
Yeah.
who are already doing that stuff at other companies?
Yeah. So I'll tackle the second one first. So I think in terms of, attracting talent, we are still in a war for talent, and the best talent, the folks who are the most, apt and best performing, are always going to be in demand. And so infrequently do I find, the top performing candidates just sitting on the sidelines of the economy. They're usually already in existing jobs, doing really well, and killing it in an existing job. So you're usually going to be pulling them out. An individual outreach to these folks. I saw your profile. I love it. I think we've got a great role for you. We'd love to chat with you about that. It's a bit of a sell, right? And so I think, yes, passively posting on a job board, if you're a very big branded company that everyone already knows, like Google, yeah, you can probably post your job and you'll get a lot of inbound. But, most startups, you're not a known entity. You're going to need to do some outreach. And, I think individually reaching out, like the CEO reaching out, or that always goes a long way, right? I'm the CEO of this company. I saw your profile. I love it. I'd love for you to join my team. Let me tell you about this opportunity. So that is probably how I would think about going and getting candidates versus a much more passive, we'll just post it on LinkedIn and hopefully through osmosis, it'll just kind of happen. That's how I would think about it. I'm a very proactive, find the people you want, go target them, sell them on the role, try and bring them in. In terms of kind of who is best to hire, I think there are two ways, as you mentioned. Like, I'm a huge fan of trying to get, someone who's working in a stage or two later company, that kind of has a playbook for kind of where you're about to go next. And maybe they're the number two to the function, right? And you bring them in and, you promote them. They then head up the product function, they head up the finance function. But this is the step up role for them. And they kind of have a bit of a playbook on where to go, what you're going to need to build, because they've just done it. And their motivation to do the work again is that they'll head up the function, right? I find sometimes if you end up getting a repeat, this is my fourth, chief product officer role, and I used to do it at a much later stage company, what's the motivation, right? Maybe they're bored and want to do it again, fine. But often or not, they'll probably be less excited than they were doing the first or second time doing it. So I love the kind of up and comer. They know where we're going to go. Their business that they're currently working at is something we'd like to be in, 2 years, 3 years, and let's hire them in to kind of apply that playbook for us.
Yeah, absolutely. And you personally have worked as a CMO yourself at companies like Policy Genius, Wealthsimple. So can you share some learning from that experience that can be helpful for the founders who are currently in the mix in regards to marketing?
Yeah. So, I mean, I think, one of the things I would advise founders, who many of which have not worked in the marketing function before, is, there are two sides of the marketing function. This is often the case in many other functions as well. But, there's kind of the more brand side, right? Which is kind of consumer insights, creative marketing campaigns, maybe PR. And then there's kind of the more growth side, right? Which is much more quantitative. It involves, performance marketing and data and tracking and marketing attribution and kind of reconciling how you spend all your budget and where that generates leads. And those are two very different, sides of the function, right? And often done by very different people. And so I think it's important for founders to understand, what is most critical that they need at that stage of growth that they're in, right? And I work, at Portage. We invest in fintech businesses from kind of seed stage up, and the needs of marketing and go to market shift over time, right? And the earliest phases in a seed, Series A, Series B, it's very performance marketing driven, right? You're doing a lot of testing. You've got a small budget. You're trying to validate, okay, we've got this product. Can we effectively get it in front of people on which channels? We're doing a bunch of testing. And, that's a very performance growth oriented profile. And I think as you get, a little bit more later stage, the needs start to shift, right? And so you're going up against incumbents, you're, with bigger budgets, and you're on their radar and they're on yours. And you've got to really start to carve out maybe a differentiated positioning, right? That's actually crisp and clean. You're not just getting low-hanging fruit of kind of hacky ways of growth. You get to a size and stage that you need a little bit more polish and understanding of who your consumer is and going to market with an actual, properly insight-driven campaign. That might be more of a brand person. And so I think it's important for founders to understand that there are differences in the function, right? And it's important to not, ask your interior designer to be your accountant, right? And that's kind of what I sometimes see founders ask their CMOs who want, I want someone who's going to be super creative and create an amazing blockbuster, marketing campaign. But at the same token, I want them to build out my attribution model. Usually two different people. So it's fine to, you're going to have to choose one or the other. And then you can surround those individuals with a team that can complement their skill sets. But it's critical to know the difference and understand what you need at your stage of growth.
Absolutely, I totally agree. And since I have you on the podcast here, and I've myself played around with performance marketing, and would love to ask you this question that when you're testing out a campaign, let's say an ad campaign on Facebook, for how long should your one campaign be tested before you make a judgment on that this is working or not working, and you switch over to another campaign?
Yeah.
Right. Or should you run A/B testing and see which one is working best? What's the best approach there?
Yeah. I mean, I'm always a fan of A/B testing, of course, right? I think, more testing is better than not. And I think it also depends on your budget, right? I mean, if you're at a much later stage, you're going to want to try and, do enough velocity to get it statistically significant to get a read on, is variant A actually better than variant B? And, sometimes you need to run those for 4, 6, 8 weeks to get a really solid stat sig read on the test. But, at an earlier stage business, you may not have that luxury, right? Maybe we are more cash constrained and, we only have a couple weeks to run this test. And, you may make the decision off of a leading indicator, right? And you may say, okay, I'm just going to judge it off of the clicks and the early rates of conversion. And, I'm going to make a bit of a gut call there. I don't think there's, one right way. I think the bigger your budget, the higher the bar I think that comes on, well, does this test actually work? Because I think the knock-on implications are quite profound. If you're managing a budget that's 100 million, that is going to be a very different, I think, decision vector than, a much smaller budget where you can change things very quickly and you're just pulling the levers yourself. So I think, obviously I like to try and hit stat sig, but I understand that not every, business is going to be in that model and have the luxury of doing that. And I still think you can make decisions off of leading indicators. And that's why in the earliest stages of business, Series A, Series B, that's why the performance channels do so well, right? They give you some data to actually make decisions off of. If you're just spending on out of home at a Series A, you're like, I don't know how it did. But, with Facebook and Google, you're getting real-time data.
Yeah, that's great. And let's try to talk in example term. Let's say we have a budget in totally arbitrary terms. So let's say we have $1,000 budget, right, for a month, right? So how much would you spend on one test campaign?
I mean, it depends, right? I mean, I think if your total budget is $1,000, I think best case, I always advise my startups to always have an always on testing budget, right? And, we obviously have a total marketing budget. We probably have a leads goal to achieve with that
Right.
marketing budget. And I like to kind of carve out, 85% of it might be going to achieve the main directive. Okay, we need to spend this budget and achieve the leads to generate the revenue that we need. But I always want to be testing, right? And I always want to carve out 15% of my total budget to be able to play for ongoing testing. And I don't want to goal my testing budget against the same criteria as my regular marketing budget. And the reason why is, if I think, if everything I know I've done so far cost me $50 to get a lead, let's goal the 85% against that. But the testing budget should be free to try something that's a little bit out there and not goal it against a $50 lead. Let's see how things go for a bit. But you always have to have this carved out because you will never find new things if you are always goaling it against, kind of the core. So I think it's critically important to always have a testing budget carved out. I typically carve out, 15%, 10, 15% as an always on testing budget. And I try and not, kind of goal that budget against the core marketing, OKRs.
Yeah. Yeah, that's great insight there. And now talking about the best marketing channels, I'm sure you'd love them all, but for startups, what do you think is the best marketing channel for them, or it really depends
Yeah.
from startup to startup?
Yeah, I mean, the short answer, it does depend, right? I think, at the end of the day, our goal as, marketers or startups is to identify our audience, right? Who is our target market that our product meets a great need for? And what is the most cost-effective means of getting in front of that audience, right? And so we, at Portage, we invest in fintech, and, the fintech channels, are maybe very different than jewelry. And, jewelry might be doing really well on Instagram because it's a visually driven category, while, fintech might need paid search because it's a very intent driven, I'm looking for insurance. And if you're typing best insurance companies or best life insurance companies, your intent on insurance is probably pretty high on paid search. So it does vary according to your category. But I think, the general channels that I do see, in the earliest days, as I mentioned, folks tend to start with Google or, paid search because it is easy. You can plug into, it's easy to set up a campaign. There's tracking attached to it, and you can get in front of an audience of relatively decently high intent. Paid social is another one, right? So Facebook, Instagram, YouTube, that's often where I see many startups first deploying capital and testing to try and understand what audience, their product resonates with and how much it costs to get in front of them. But as you scale, those, Google, Facebook, they are not defensible channels, right? Anyone who deploys capital and pays a little bit more for that bid, that click, gets the lead. So it's a good place to start. But as we scale, I really encourage our portfolio companies to start to develop and understand, well, what are your moat driving growth channels? Channels that as you scale on them, you actually get better at securing customers cheaper with more defensible position. And so that varies by company, but some of the areas I'm seeing now in this environment, because cash is less plentiful than it was in 2021. SEO is critically important. So search engine optimization. So when folks are typing searches on Google, are you ranking organically for some of those searches? It's a great way to get in front of an audience, very high conversion channel. It's hard to do, but that's one way. Strategic partnerships are another very big play that I'm seeing come out in the last couple of years. And what that means is, getting in front of an audience. If you find another business that's also servicing your customer, and you can get in front of them with an agreement on, okay, we offer financial services, you offer travel. Can we kind of collab with our audiences and create an agreement between each other for us to kind of share our lists or cross promote? Those sort of agreements are very interesting, and they're hard to set up, right? You can't just have any competitor come in and say, I'm also going to advertise to your audience. Usually it involves a bit of a negotiation. There's a contract, there's an agreement, but it's a very scalable, defensible way to get in front of, your target audience. So strategic partnerships, I'm very interested in. SEO, I think, is a hot area. And the last thing I think, I just encourage folks to think about, and, I talk about a lot is, in the last 10 years with cheap capital, I think folks kind of maybe forgot, there are 4 P's in marketing, but everybody was focused on promotion because it was very cheap to deploy capital in Facebook and Google and grow that way. But there's a lot of other things you can play with in the mix to drive revenue, right? And so pricing, obviously, in this inflationary environment is something that a lot of folks have started to play with. How do we think about pricing? Should it be the same for every audience? Are we delivering better value for one than the other, right? And how do we think about our pricing dynamic? The product itself, right? Even product conversion. A lot of folks, in marketing sometimes just focus on the ad, but you get someone to the landing page and they start to, into your funnel. Is that an efficient funnel? Can you do better work around removing friction, better converting folks, incentivizing people who've started the shopping journey but haven't finished? So ensuring that you're thinking about the entire suite of tools you have available to you, not just marketing, promotion, and paid ads.
All right, so that's great. It's only app that we discussed the 4 P's of marketing here in this.
I can't believe here I am. Like I remember, being in school, being like, "Oh my God, these things are so lame. Like, why would anyone even care about these?" And here I am, many years later, echoing them. But I think again, it's important to remember there's lots of ways you can influence and influence the customer. But it's been pretty easy the last 10 years to just focus on paid media.
Absolutely, totally agree. So it's coming out to be a great marketing market class for early stage startups. I'm excited. And to top this off, my last main question before we move on to the rapid fire, and this one is about what's a frequent mistake that you see founders make in regards to their GTM approach?
Yeah, I think, a couple, I would say the first, I think, would be, we spoke a little bit earlier around, bringing in too senior too soon. I think, ensuring that you really have the right profile of individual to come in and lead your sales function, to lead your marketing function that makes sense for the stage that you're at. The second, I think, would be spending too early on brand. I think a lot of businesses, they want awareness. They want to drive excitement about their business. But I've seen some, startups spend very heavily on brand before they even established, well, what is the product you're selling, or who is the audience you need to get in front of? And one of the nature of startups is your product is evolving pretty rapidly in the earliest days. So if you spent a huge amount of money in your first year on brand marketing, and you establish yourself as like the cheapest banking solution for consumers, and then a year later you're actually not on that positioning at all because you found an efficiency in, I don't know, speed, and you're all about the quickest, most efficient way, all that spend on that brand marketing is gone to waste. So I think really ensuring that you have a very clear understanding of your product market fit, who you're targeting before you lean heavier into kind of brand spend, I think is an area. And then the last piece I think would just be, ensuring that, there's a very strong connection between the functions. And I think as you scale up, get beyond kind of Series C into Series D, uh, you know, you can kind of grow in the early stages by having their functions do their own things, right? In a little bit of a silo. But as you get into kind of Series D, future growth is unlocked by having, marketing and sales work very tightly in partnership, or marketing and product or finance, you know, tackle cross functionally a new opportunity that maybe unlocks a new geography, it unlocks a new product segment, it unlocks a new type of, cross promotion between, your customer. And that requires coordination and shared, alignment on the OKRs. And I see a lot of startups trip up a little bit in that, where what got them here won't get them there. And they were super, functionally driven in the early days. But as you get to a certain size and stage, you've got to flip to say, we're all marching toward this, kind of target. And we're going to need to work together to do it.
Yeah, absolutely. Totally agree. And now let's do our rapid fire round wherein I'll ask you five quick questions about the VC fund at Sargard, and would love for you to give five quick answers. Sounds good.
Sure. Sounds good.
All right. So the first one goes, what are the sectors and regions you invest in?
So we invest in fintech, and we invest globally with a heavier focus in North America. So US, Canada, Mexico, and then in Europe, France, UK, Germany.
Great. And what's the typical stage of investment?
So we're an early stage fintech investor. So we, can write seed checks into kind of Series C, and then we would do follow on, but primarily early stage.
Great. And what's the typical check size?
It varies by stage, of course, but we could write $1 million check, we could write up to a $20 million check. So there's a bit of a range, but it's definitely in the kind of early stage.
Awesome. And where can founders apply for funding in case there is a direct way?
Yeah. So obviously you can go to our website, portageinvest.com, or you can reach out to folks like myself or folks on the investment team, right? That's often the best way to do it, I find. We're at a lot of events, we're constantly at conferences or doing things like this. So feel free to reach out to us directly and let us know what you're doing. And if it's of interest, we'd love to chat with you.
That's great. And my last question, which is, where can our listeners follow you and potentially message you?
Yes, of course. So LinkedIn's my main channel. So feel free to follow me on LinkedIn, message me on LinkedIn. If you're a go-to-market person at a startup or in PE, would love to chat with you. I'm always fun to geek out and talk shop. So would love to connect.
Awesome. I'll make sure to put all those links in the show notes below. Thanks so much for coming on, Jonathan. It was an absolute pleasure having you here on the podcast, sharing your marketing and GTM insights with us.
Awesome. Thanks,
Thank you.
Prashant. It was great. See ya.